Hey everybody, welcome back. This is Danelle, and today we're going to talk about the biggest news story over this past week related to Silicon Valley Bank and how the contagion has not only affected the financial markets, but it's also affected the cryptocurrency markets as well. Let's go ahead and start with our market update as usual. Bitcoin, as you can see, is currently trading at $20,568, down 7.53% over the last 7 days. And then we see Ethereum also has taken a leg down at a 5.15% drop over the last 7 days, currently trading at around $1,400 and $77.21. So if we look down the rankings here, you see USDC coin, which is the number 5 ranked cryptocurrency in the crypto markets currently, is trading at 95 cents. Now, USDC coin is a stable coin. A stable coin meaning that it is supposed to stay stable, and USDC is pegged to the US dollar. So basically, every USDC coin that is out in circulation is supposed to be equal to $1, and Circle, which backs USDC, is supposed to have $1 for every USDC coin that is out in circulation. Now, apparently, from what we're hearing, is Circle has a large amount of money that is tied up in Silicon Valley Bank. So the biggest news that we've had thus far over the past week is that Silicon Valley Bank, which is a regional bank in the Silicon Valley region of California and is known for providing a lot of banking services for a lot of tech companies, startups, venture capitalist firms, has now basically been taken over by the FDIC, which is the Federal Depository Insurance Corporation, and California regulators shut it down after there was a bank run for people who had deposited money into the bank now trying to take their money out because they knew that there was a possibility that Silicon Valley Bank was running into trouble. So you can see here USDC coin, which is supposed to be backed 1-to-1 by the US dollar. It's supposed to stay stable at $1. If you look at it year to date, it stays at $1. It stays at $1. But then over the past day, it went all the way down to sub 90 cents. I believe it went down to about 88 cents and is now bounced back up to 96 cents. But Circle has $3.3 billion worth of funds tied up in the collapsed Silicon Valley Bank, as we can see here in this Wall Street Journal article. The major cryptocurrency is operated by Circle Internet Financial Limited, and $3.3 billion obviously is a lot of money. Now, if you do not know this, many deposits that go into a financial institution in the United States is insured, but there's a limit to how much the insurance covers. And FDIC only covers business accounts up to $250,000. Obviously, that's minimal for most businesses, particularly tech companies in that region when they're raising millions of dollars and need millions of dollars to be able to run their business, to be able to buy inventory, to be able to pay their, workers, things of that nature. They are dealing with millions of dollars. So if anything were to happen with the money that they had deposited in a particular bank, then $250,000 is certainly not going to be enough. So what happened is that the bank, the CEO came out and said that there were some issues with them needing to raise some more capital because, as many of us know, and if you do not know, banks do not just hold your money. They actually use that money to try to make more money on the money that you leave in your account on the bank. So with the bank, they will then give you a little piece of what they earn, the interest that you earn. So that's why you get, whatever yield is currently being provided at that bank at the time, but they're turning around and trying to make even more yield so they can make money as a business. Cryptocurrency exchanges have done the same thing. That's why we've seen some of the collapses of Celsius and FTX, because allegedly they were taking clients' funds and making really really risky trades that ultimately failed. And then when people wanted to get their money out of those exchanges, they couldn't because FTX and Celsius, for example, didn't have the money to cover those deposits. So similar in the traditional financial system, everyone wants to try to place blame on the cryptocurrency markets and how it's a scam, but there's also a lot of risky and leveraged plays that happen in the traditional finance system as well. And we're seeing this with one of the top banks in the country. This is actually considered the second highest bank failure in the United States since the financial crisis of 2008 and ever, actually. If we look here at the list of the top banks in the United States in the top 20, you can see that Silicon Valley Bank, here at number 18, had a value of over $26 billion. And we see this footnote here that the bank has collapsed because of its failure to raise capital. So, what is a bank run? So, if we look at the definition, a bank run occurs when a large number of depositors, fearing that their bank will be unable to repay their deposits in full and on time, simultaneously try to withdraw their funds immediately. And this occurred several times, particularly during the Depression, the Great Depression in the late 1920s, early 1930s, and people were trying to get their money out of the banks and were unable to do so. That's partially why we now have the FDI insurance, but the FDIC insurance. But as I mentioned, $250,000, particularly for businesses, is not enough to cover it. As you can see here, Caitlin Long, who is a Bitcoin proponent, said what went wrong is that management debauched its balance sheet. Depositors who have deposited more than $250,000 thought their deposit at a fractional reserve bank was an unsecured loan to a leveraged borrower, because actually it is. And feds, as the regulators, the top cop said the federal supervised banks don't have bank runs. And as we can see, that is obviously not the case, because we are now having a bank run with a top 20 bank. And part of the reason why we had this bank run, and the reason why Silicon Valley Bank had an issue with potentially being able to cover all of its deposits, is because they bought bonds at the time where there was a lower interest rate. So they were only getting a, I don't know, maybe 1 to 2% yield on those bonds that they bought. But now that the Federal Reserve has been raising interest rates, and we've talked about this in past videos when we talk about the macroeconomic perspective that we need to have when we're considering investing, whether it be in traditional finance or in cryptocurrencies or NFTs, you have to look at the bigger picture, because it all ties in together. Is that now that the Federal Reserve is raising interest rates, those bonds are now more valuable, because the newer bonds you can get at a higher interest rate. And so because a lot of tech companies are not raising as much funds as they normally do, are not depositing as much money as they normally would, as they did in 2020 and 2021 when the market was really hot, the bank decided that they needed to go ahead and sell some of those bonds at the lower interest rates that they received earlier to try to cover, just in case they needed the money for whatever reason, to give to depositors and to continue to move forward as business as usual. Obviously, that didn't quite work out. The CEO made a statement about it, and that they were looking to raise some more funds. They were considering selling some of their stock. And then once this information came out, then you started to see founders of various companies, including Peter Thiel, who's known from the PayPal Mafia. He's one of the founders of PayPal. He has a venture capital firm called Founders Fund, and he got his money out immediately on Thursday. And by Friday, California regulators shut down the bank, and it is now under the control of the FDIC. And as you can see here, the federal interest rate has hiked all these points since March of 2022. So it went from 0.25% in March to currently at 4.5%. And the Federal Reserve is supposed to be having another meeting the end of this month on March 22nd. And from what we believe, they were planning on doing another interest rate hike of at least 25 basis points, potentially even 50 basis points, because they're still trying to fight inflation, because we're still having high numbers of employment. The unemployment rate is still very low. And we're still seeing that the inflation numbers are not going down as much as they would like, despite the massive rate hikes that they have had over the past 12 months. So, what does this mean? This means that it could affect not only a bunch of different companies, from what we've heard, companies that we know of like Roku and Roblox have had money in Silicon Valley Bank. I also mentioned earlier that a bunch of startups in the Silicon Valley area had been doing business transactions and banking with Silicon Valley Bank. So a lot of those companies now will not be able to pay their workers or be able to pay to do business because their money now is tied up at Silicon Valley Bank. The FDIC came out with an announcement and said that they will be able to disperse the $250,000 that is covered for most of those deposits, and then they will be issuing a certificate. Basically, I guess it would be almost like an IOU regarding the remaining funds that companies have in this bank. Now, it's not guaranteed that they will get all of that money back. And there's already other major financial institutions that are trying to buy up that debt. So there's a possibility that we could have a major company, one of the big four, like a JP Morgan Chase, Wells Fargo, something along those lines, that the Citibank, that could decide to come in and just buy the bank. And that obviously would then provide opportunities for a lot of the depositors to get some of their money back and still be able to do business. Otherwise, if that doesn't happen, then maybe the federal government, will have to jump in, which is what they did in 2008 with the whole too big to fail, because financial institutions like Bear Stearns, which ultimately did go into bankruptcy and became defunct. There were some major banks like Bank of America, for example. If they were not bailed out, then most of us would be screwed. So it's unfortunate that there's a possibility that people like me and you, taxpayers like me and you, could potentially be bailing out a bank called Silicon Valley Bank, because obviously Silicon Valley isn't always looked at in the best light, because people consider, oh, that's the one percenters, those are the billionaires, the tech founders who, are able to go and live in Silicon Valley and raise up, rents in San Francisco and the Bay Area and places like that. And now we're trying to bail the rich out. So be curious to see what happens over these next several days. Definitely keep an eye out to what happens, because not only is it Silicon Valley Bank that is being affected, and the companies that have invested not only in the bank, but have done business with Silicon Valley Bank, but also it is affecting other regional banks as well, because now people are losing trust in regional banking and whether or not they should keep their money in these smaller banks and just go ahead and move their money to one of the larger, bigger banks. Because at the end of the day, there still has to be some trust. That's why cryptocurrency and Bitcoin was even invented, is because of the 2008 financial crisis and what happened. And so now with Bitcoin, you have the opportunity to have self-sovereignty over your own funds. Now, not everyone's going to be willing to put, all of their net worth in their own hands. They may not trust themselves, because there is a way that you could lose that money if you don't keep your private keys and keep your, passwords and things of that nature under lock, safe, and key. So people would rather put that trust into a larger institution that has access to those security features to make sure that their funds are safe. But as we can see, it's not always ironclad. Even if you put your money into a bank, it doesn't mean that they're always going to be doing business that they should and keeping it above board. And there are opportunities for them to make mistakes, or if you have situations where you have a potential bank run where things get tied up and you no longer have access to your money. So there's plenty of information out here regarding what's going on with this Silicon Valley Bank. We'll make sure to keep you posted. It's a very fascinating story because it affects and has so many tentacles, not only in the traditional financial markets, but as well, we can see with cryptocurrency, particularly what's been going on with USDC, we expect that it will get back to that dollar. But once again, this was supposedly a safe haven. Stable coins like USDC, like Tether, like BUSD, these were supposed to be the safe havens in the cryptocurrency space because they're not supposed to be volatile. They're supposed to stay stable. So now there may be another reason why Bitcoin bounced back to 20,000 because it actually went down to 19,000 earlier this week. So people may be looking to Bitcoin to be more of a safe haven. And a lot of Bitcoiners, this is what they've been predicting all along, is that the traditional financing system needs to be rehauled. There's a major problem, particularly with the fact that these governments can just print more money and dilute and inflate the value of their currency. And so Bitcoin is considered hard money. At the end of the day, only 21 million will ever be in existence, will ever be mined. And so there's no way that it can be inflated. And it gives you an opportunity to have decentralization. There's no one trusted party, and you can have self financial sovereignty over the value of your money and your currency. So this is going to be a widespread news subject that I'm sure if you haven't already heard about, you will be hearing about in the next several days, particularly if you're investing in the stock market and the cryptocurrency market. And it also obviously affects the NFT market as well. So we will keep you posted. Thank you so much for watching. We look forward to connecting with you and linking up with you on the network chain. In the meantime, take care and stay tuned. Bye-bye.